goddamn rich.
I think it's time to blow this scene. Get everybody in the stuff together. Okay, 3, 2, 1, let's go.
Getting fucking rich. I want my fucking money. Griffin, I want my fucking money. Yo, motherfucker. Holy shit, we're gonna be so fucking rich. So goddamn rich.
I think it's time to blow this scene. Get everybody in the stuff together. Okay, 3, 2, 1, let's go.
Getting fucking rich. I want my fucking money. Griffin, I want my fucking money. Yo, motherfucker. Shit, we're gonna be so fucking rich. Great. Damn it, we're gonna be so fucking rich. I want my fucking money.
You're an original, aren't
yelling,
you?
Cowboy. Give me the fucking money. Get the goddamn money printer out. So fucking rich. Get the goddamn money printer out.
Yeah, you don't know all the shit that I've been through, all the pain and the struggle that I lived through. Now I'm rolling up these papers that I smoked through, thinking about all the shit that I've been through. You don't know all the shit that I've been through, all the pain and the struggle that I lived through. Now I'm rolling up these papers that I smoked through, thinking about all the shit that I've been through. Now I'm sipping on this whiskey. Got one chance and it's risky, so you can't play around. And I got my team behind me like a background. I don't never back down, picking up the slack now. Now I'm focused, keep on grinding for my stacks now. I'm feeling lost in this ocean, where's a lighthouse? I keep on swinging for the fence and I ain't strike out. And yeah, that's how I'm feeling, yeah, that's how I'm feeling now. We're not here for a long time, yeah. It's 9 to 5, it's a long grind, yeah. A ladder to success, it's a long climb, yeah. Now I'm sitting here making up for time, yeah. Man, I took so many losses that I lost count. I didn't know what I was made of, but I found out. And this life will blindside, you better look out. These haters wanna see you fall and get you took out. Yeah, cause I fell on my face, and this life is a race. I keep on checking my place. Now I'm riding for my team, you can tell by my plates. And this life just threw a hook, it caught me right in the face. But I'm getting back up, I'll do whatever whatever it takes. I'll climb a couple of mountains, I'll swim a couple of lakes. Don't got time for the bitching, don't got time for complaints. Now you going through some shit, now tell me how does it taste? You don't know all the shit that I've been through, all the pain and the struggle that I lived through. Now I'm rolling up these papers that I smoke through, thinking about all the shit that I've been through. You don't know all the shit that I've been through, all the pain and the struggle that I lived through. Now I'm rolling up these papers that I smoke through, thinking about all the shit that I've been through. Now I'm living with my choices, I just own my mistakes. Cause I'm screaming fucking handout, I ain't searching for breaks. But I'm barely treading water and this life is the lake. Now the pressure keeps on building as I'm raising the stakes. I ain't looking for advice, now I'm looking for space. Now I'm dealing with these losses, but I know I hate the taste. Now I'm sitting back, I'm thinking as I smoke into the face. Now it's time for these apologies, the time is too late. So bygones be bygones, I'm on business with a tie on. So fuck a shoulder to cry on, I'ma get a hoppin' like Zion. Let's raise a glass, I'll toast that. Reminisce, we roast that. How I wrote them and ain't wrote back. I'm never flimsy, the goat's back. So I don't feel bad, no not at all. When a lot of years, write a lot of calls, a lot of birthdays without a call. Ain't got time for that, so fuck a fraud. You ain't there for me, I ain't there for you. You won't bleed for me, I won't bleed for you. All the hard times I lived through, keep moving, gotta get through. I got goals and cash I gotta get to. All these memories that I flipped through. If you can't relate, then don't judge. I'll stand my ground, I won't budge. I'm sitting back cause I burn buds. I swear to God, this life's good. You don't know all the shit that I've been through, all the pain and the struggle that I lived through. Now I'm rolling up these papers that I smoke through, thinking about all the shit that I've been through. You don't know all the shit that I've been through, all the pain and the struggle that I lived through. Now I'm rolling up these papers that I smoke through, thinking about all the shit that I've been through.
And we are the whale, guys. I mean, we own it 5 times over.
We're the fucking whale. Plain and simple.
Well, that's the thing when people talk about VW, they keep saying, oh, it's different, it's different. It is, of course it is. But in some ways, I think it's stronger because you're dealing with people, say the majority haven't had it. But I don't know any billionaires that have been buying shares.
Well, you know what's wild? Wolfie, the Porsche settled with the government in 2008 and said, all right, that's enough.
Yeah.
That was one whale. We are the mother of all whales.
Yeah, there's no settling with us. There's no settling with us.
Yeah, with us.
We're the Borg, man. You cannot reason with us. You know what I'm saying?
Exactly.
We're going to assimilate you.
No matter how much they offer, there's going to be people saying, fuck that, I want double, triple, 5 times that amount. No matter what they offer.
100.
They could offer $100,000 a share, and I guarantee you 40% of the people would be like, fuck you, I want $500,000 a share, you know? That's what they'll be like, it's GameStop. I want $2 million a share.
I want Wall Street to get turned upside down, and I want to see a bunch of motherfuckers who are literally evil end up on the fucking street. You know.
Same.
I can't wait for fucking Biden to get on TV and stutter away and say, all right, there's enough of this. Gary Gensler and then the Fed. It's gonna be phenomenal. This is great. I love it.
They might try to sweep it under the rug. They might just try to sweep it under the rug and be like, oh, all these hedge funds fucked us. Let's never talk about this again. You know, and that's it. So.
But that's why I love the fact that it's between 5 and 10 million people, because the eyes are on this. You know, the noise has been made, and when it comes out, you're gonna have 5, 10 million burries that have all got a tale to tell, and you know, there's going to be serious questions asked to the regulatory bodies of what the hell happened after 2008, and why didn't you put the rule changes in 2012, and what do you mean the only thing you did of any essence was an SSR rule and then made market makers exempt? You know, they're going to be serious questions, but then they got on the other side, they got a massive transfer of wealth to people that are going to have the time and be open to be able to say what they did, what their role was, what their part was. And then I'm hoping that's the big thing for me is change. 5-10 million people suddenly come into a serious amount of money, if that's how it ends up, because no financial advice. But if it works the way, you know, those who have, for the reasons they have, expect, you know, I'm hoping that's going to really change. And when I look at the SEC rule changes, etc., that's what actually gives me even more. I know you know, a lot of people are down because it took so long and this, that, and the other. Not really seeing it, but that's background. That DOJ announcement for me was massive. I think that's why people get nervous when people start saying, "Oh, it's gonna," and we've had, you know, I flagged it up, not that it got picked up on, but you know, we've got real smart people that have been looking at this, real smart apes and DD done, etc. What if they was all meant to be correct? What if they were all correct, but because of everything going on in the background with the manipulation and the tricks and the market exempts and with all that going on, which is now known, I never knew none of this a year ago, 18 months ago. I never knew about market exempts. I didn't know they could do a naked share without a locate. And all this is coming out, and they're going to be serious questions saying, that's not liquidity. You know, there's court cases, there's a paper trail going back 20 years on this stuff. None of this is new. And when it comes out, it's blown wide open. It's not, you know, UK was told
$30
yeah,
has arrived.
You ain't missed it.
Go ahead, brother. You were making a great point. Keep going, brother. Preach it.
Go ahead.
Yeah, sorry, I just got cut off and then everyone pulled in, so I sort of lost trail. But it's that paper trail, which it's the aftermath of us hitting a home run, where we would have done money, and yet we've been here. You know, 2008 woke a lot of people up, but a lot of people still don't know the truth behind that. They've all watched The Big Short, etc., but they still don't know the truth. They just see it as it's what happens in the market. This time round, and we've been told by all MSMs, you know, the Gasparinos and the, you know, I don't even like mentioning their names and give them airtime, but hold them responsible afterwards, because you're going to have all these experts that are on the telly getting paid hundreds of thousands of nice suits, talking down to us like we're all idiots, and insinuating everyone's like 16, 18, living at home with their mum, you know, never had to live in the real world, blah.
It's now been 4 years since these brokers pulled the buy button. Since the market makers and clearinghouses colluded together to steal billions of dollars from retail investors. January 28th, 2021, when U.S. broker-dealers suddenly disabled the ability for retail investors to buy a basket of stocks in which they were insanely profitable, spurred me and many others like me into action. I decided to delve deep into the inner workings of the stock market. After having been a trader for 20 plus years, I figured it was time to really understand what was happening. And what we have uncovered over the last few years is incredibly alarming. The stock market is heavily manipulated by banks, prime brokers, market makers, and their hedge fund clients. These entities are motivated to skirt the law, knowing that any fines from the Securities and Exchange Commission are simply seen as an operational expense and is often uncollected. This manipulation affects everyone's retirement accounts, everybody's pension, every individual investor's brokerage account. And people should be demanding urgent government intervention. I know a lot of you are tired But I'm not fucking tired. I'm not fatigued. Thomas Peterfy came out and said, "We have come dangerously close to the collapse of the entire system. And the public seems to be completely unaware of that, including Congress and the regulators." That was a quote from Thomas Peterfy, the founder and chairman of Interactive Brokers, also known as IBKR, following the events of January 28th, 2021.
Founder and Chairman Thomas Peterfy. Thomas, good to see you again. Thanks for joining us. My first question is, are you surprised and or disappointed not to be a part of the hearing tomorrow?
Oh, no, I'm neither surprised nor disappointed. This is just fine with me.
Just fine. I can imagine. So what do you think will be the focus? Because there's lots of angles here, whether there was insider trading, whether the likes of Robinhood hurt their customers, and whether the likes of Citadel are abusing their power. What do you think is the key focus and the likely outcome?
So what I would like to point out here, that we have come dangerously close to the collapse of the entire system, and the public seems to be completely unaware of that, including Congress and the regulators. So let me explain to you that on January 26th, Game had closed at $77 a share. The following day, it closed at $148. The following morning, on January 28th, the stock opened at $355 and traded up to $480. At the same time, Game had 50 million registered shares outstanding and the short interest of 70 million shares. In addition, there were about 1.5 million calls, which would call for 150 million shares. If the longs repay their margin loans and exercise the calls, their brokers would have been obligated by the rules, as they are today, to deliver to them 270 million shares, while by only 50 million shares existed. So when the shorts cannot deliver the shares, the broker representing the longs must, by the rules of the system, go into the market and buy the shares at any price, pushing the price into the thousands. So as the price goes higher, the shorts default on the brokers. The brokers now must cover themselves. They push the price further up. So the brokers default on the clearing houses, and you end up with a complete mess that is practically impossible to sort out. So that's what almost happened. To avoid this in the future, the SEC needs to immediately call for reporting of short interest on a daily basis, because they are currently only reported twice a month. And I think they should increase margin requirements on shorts by 1% for every percent of short interest. That would solve the problem. This is a gaping hole that didn't had before, because short squeezes are considered market manipulation, which is illegal. But so therefore nobody did it. But with these social platforms, people can just chit chat, and suddenly a short interest emerge without pointing at any one person who is guilty, right?
So Thomas, I mean, it's extremely complicated, and they'll have to try to explain all this market structure in between some of the populist grandstanding from members of Congress tomorrow. But ultimately, who are you saying is to blame, if anyone, for what happened?
No, it's nobody. Nobody is to blame. There is a hole in the system that we immediately have to stop. There's a hole in the
short interest reporting.
Short squeezes. Sorry.
Naked shorting.
You're saying that is the short interest reporting. That's what was happening here. That was the problem.
No, the problem was that there is no increased margin requirements on shorts, as the short interest increases. As a matter of fact, most people don't even know what the short interest is because it's only reported twice every month.
Let's start with payment for order flow. Payment for order flow is a system devised by none other than Bernie Madoff. The United States stands alone, ladies and gentlemen. It is the only Western country that still allows the practice of payment for order flow. It has been outlawed in Canada, the UK, Australia, Europe, etc., for over a decade. Citadel Securities, the largest market maker and chief executor of PFOF, once criticized this very system in a 2004 letter to the SEC. They called it anti-competitive. They said it was a source of, quote, obvious and substantial conflict of interest. And even Gary Gensler, the former SEC chairman, highlighted in a Bloomberg interview that, quote, if you place a market order, a retail market order, 90 to 95% of them do not go to the lit exchanges. They do not go to the NASDAQ or the New York Stock Exchange. They go to wholesalers, the market makers like Citadel and Virtue. And they don't have order by order competition. Now, this, of course, is all thanks to payment for order flow, where these market makers internalize trades against their portfolios and distort order routing to less transparent markets like dark pools, also known as alternative trading systems. This impacts market liquidity, bid-ask spreads, and competition. It allows your trades to be front-run, and it allows market manipulation. Citadel Securities executes 47% of all U.S. listed retail volume. 47%. And they use payment for order flow to divert orders away from these public exchanges and into their dark pools, allowing for internalization and rerouting. This, of course, encourages the gamification of trading apps, where increased trading actively, directly benefits market makers like Citadel, creating a huge conflict of interest, as they are both a market maker and a hedge fund. They gain insider knowledge from their payment for order flow dealings. And of course, not alone in this practice is Virtue Financial, another high-frequency trading market maker, supports payment for order flow while handling a significant portion of individual investors' orders. It's so bad that the SEC has actually charged Virtue Financial for market manipulation, as they have found that, allegedly, Virtue has allowed their hedge fund to see all of the orders being routed by their market maker, giving them the ability to front run all your trades. And this is in thanks hugely to Bernie Madoff here. We must urge the Securities Exchange Commission to ban this Madoff-designed payment for order flow system in order to restore integrity into our markets and save retail investors from being robbed every single day. Now, addressing short sale reporting under the most recent regulations, the risks associated with short selling can lead to systemic failure due to their infinite potential losses, especially when compounded by naked short selling, essentially creating counterfeit securities. A coordinated short selling campaign could aim to bankrupt a company, and it has done so in the past with great success. But if that company revitalizes, the short sellers face enormous buybacks, potentially causing market chaos, much like we saw with GameStop and AMC. in 2021, almost exactly 4 years ago. Today, 4 years ago, you could not buy GameStop, AMC, and nearly 48 other securities because these criminal brokerages took away retail's ability to buy in order to save their hedge fund buddies. Now remember, Thomas Peterffy here said, if he can't get the shares, he has to go into the market and buy the shares at whatever price, whatever the price is. That could have pushed the price into the thousands. When that happens, obviously the shorts cannot pay up, so they default on the brokers. The brokers default on the clearinghouses, and the whole thing is a huge mess that is impossible to untangle. Thomas Peterffy here, the CEO of IBKR, warned. Now, the current regulations require only bi-monthly reporting. That's twice a month. It does not cover hidden short positions in derivatives, in swaps, or misreported shorts marked as long. There is something out there called the Madoff exemption. The Madoff exception. Now, the Madoff exception in Regulation Show allows market makers to naked short sell stock under the guise of providing liquidity, essentially legalizing the creation of counterfeit securities. This artificially dilutes stock prices at no benefit to the company. This manipulation, combined with strategies like planting insiders in boards, short and distort campaigns, can create an infinite money glitch for hedge funds and market makers, especially when the market maker is a hedge fund. Now, Jim Cramer, once a master market manipulator himself on CNBC, revealed, "It's just fiction," he said. "I think it's important for people to recognize the way the market really works is to have that nexus of hit the brokerage houses with a series of orders that can push it down. Then leak it to the press and then get it on CNBC. That's also very important," he said. And then you have a kind of a vicious cycle down. The manipulation was very clear when GameStop and AMC's stock price dropped drastically when the buy button was removed from retail investors. Then on March of 2021, by a conveniently timed article on MarketWatch predicting the crash of GameStop, of course, the stock price followed as the high-frequency trading algorithms continued to push it down, and market makers were able to short sell the stock, basically sell stocks that they didn't own and didn't have borrowed, even on the way down, regardless of any uptick rule that was created after the 2008 financial crisis. Elon Musk has critiqued short selling as a scam, which underscores the need for transparency. The industry often dismisses these truths as conspiracy theories, yet insiders have confirmed these practices in documentaries and for many years. Now, we must advocate for the daily reporting of all forms of short positions to prevent such market manipulations, as well as the positions held in swaps and derivatives. People's confidence in the SEC has waned, despite Gary Gensler's efforts. Now we have a new acting chairman, UADA, and soon to be a new chairman of the U.S. Securities Exchange Commission, Paul Atkins. As of now, the agency seems more focused on rhetoric rather than action against ongoing market abuses like short ladder attacks, short and distort campaigns, spoofing, and market manipulation. A recent poll shows that 97% of respondents do not trust the SEC. Elon Musk has come out and said that he does not respect the SEC. It's time for real change. For the Securities Exchange Commission and the CFTC, the Commodities and Futures Trading Commission, to enforce the rules and stop slapping these firms on the wrist for their infractions. The system is rigged, ladies and gentlemen, and it's time for these regulatory commissions to stand on the side of justice and transparency. Retail investors demand transparency. We demand free and fair markets, which we absolutely do not have. People want their interests to be represented accurately and considered thoughtfully. They want their voices heard and not drowned out by those who profit off of them and treat retail as a product rather than customers. Individual investors, we must not accept a system that manipulates and monetizes and leeches off of us. We must stand united to effect positive change for ourselves, our families, and our communities. This is our time. And the Madoff exception, as you can see here, refers to a loophole in financial regulations, specifically in the context the Madoff exception refers to a legal loophole, specifically in the context of short selling, that was created by a provision in Regulation Show. This loophole effectively allowed market makers to engage in naked short selling, which means selling shares that do not actually exist or are not borrowed. The term Madoff exception is a reference to Bernard Madoff, whose infamous Ponzi scheme was based on fraudulent practices, but it has been tied to this specific regulatory allowance for market makers to engage in activities that can distort the market without legal repercussions. Of course, you guys are wondering how it works. So I went ahead and asked ChatGPT to explain it for us, because it does a great job of summarizing things. And it says, in an effort to maintain liquidity in the market makers such as Citadel Securities or Virtue Financial are exempted from some of the standard requirements that apply to short selling. Specifically, the exception in Regulation Show that allows these institutions to sell securities short without first borrowing the shares or even ensuring that the shares exist. They can essentially create securities out of thin air. This is different from traditional short selling, where a trader must borrow shares before selling them. Naked short selling is a threat to the national security of the United States of America and that of all investors around the world. This becomes problematic because it allows institutions to manipulate the market by artificially creating a glut of shares in circulation, even though those shares don't actually exist. You are given ones and zeros in your brokerage account. The market maker does not have to borrow or locate those shares. And if they do, if they can't, it simply shows up as a failure to deliver 35 days later on some list called the Reg Show Threshold Securities List. If they don't deliver them, nothing happens. They get a slap on the wrist. There are synthetic shares out there floating around, artificially diluting a company's stock. And market makers can do this even when the stock price is going down, regardless of the Dodd-Frank regulations that were enacted after 2008. This process distorts the supply and demand dynamics of the market, often leading to a situation where the supply of shares vastly exceeds the actual number of shares available, which can create significant downward pressure on a stock's price. The term Madoff exception came to be used because of the way Madoff's fraudulent actions highlighted how this exemption could be exploited. The idea behind the exemption was to ensure smooth market operations. But of course, it became a tool for manipulating stocks. Essentially, market makers could create fictitious shares, short them, and continue to profit from the difference without ever having to deliver real shares back. This exemption has been highly controversial as it undermines market integrity and is viewed by many as contributing to market manipulation and fraud. And that is, of course, exactly what it is. You can see we have articles here dating way back to 2008 talking about this very exception. Politico called it the Madoff exception. Madoff was famous in regulatory circles as the man who gave his name to the Madoff exemption, the informal name for a measure that allowed his firm to flout the so-called uptick rule, preventing most market participants from short-selling stocks whose share price was ticking downward. Only short sales on the uptick were permitted until earlier in 2008. Short sales are bets in the market that a stock will decline. And surprise, surprise, those that enabled the Madoff exception were, of course, receiving significant amounts of money. Taxpayer dollars and money from Madoff and lobbyists. In case you didn't know, in December of 2008, Bernie Madoff was charged by federal prosecutors in a $50 billion securities fraud at his advisory business. He was sued by the SEC, and he was convicted of fraud and sentenced to 150 years in federal prison. He died in prison in April of 2021 at the age of 82. And up until the collapse of FTX and Sam Bankman-Fried, that was the biggest Ponzi scheme in Wall Street history. Now we've got similar things happening with other firms that sell tens of billions of dollars in securities that have not yet been purchased. Firms like Citadel, firms like Virtue, market makers. And they can do that legally. The only way to get this to stop is to stop routing orders to them. But your brokerage, of course, is not going to do that. If you're using a payment for order flow brokerage like Robinhood and IBKR, Schwab, E-Trade, and the vast majority of brokerages, you know that this is going to continue indefinitely. Because of this, we're creating a brokerage called Lit Exchange. One that has been created to bridge the gap between the 1% and the 99%, to prioritize fairness and transparency in financial markets, to automatically route orders to those lit exchanges, to the NYSE, the NASDAQ, IEX, etc., to actively prevent and deter manipulation of your trades that occur every day thanks to payment for order flow and dark pools. This is your chance to protect your investments, to use a bleeding edge user interface, the likes of which you have never seen in any brokerage firm, and to actually be able to own the company. Because for the first time in the history of the world, a brokerage, an upcoming brokerage, is actually giving you the chance to own the company before launch and before IPO. You can check out our filings on the SEC Edgar website. You can visit the FINRA regulated funding portal, Silicon Prairie, directly from our website as well. So far, over 300 retail investors have invested over $500,000 in Lit Exchange. And we are doing this as the first and only company created for retail by retail in order to change the status quo. If you have been negatively affected by market manipulation, payment for order flow, commission-free trades that, of course, are not commission-free, you need to seriously consider becoming a founding investor in Lit Exchange. The Madoff exception is not going to change. The regulators are not going to stop doing what they're doing. And many of these firms, including Citadel, has increased their short positions by hundreds of percentages year over year. We can see their statement of financial condition, and the numbers are so egregious that Citadel changed the reporting amount from using millions to thousands in order to make it appear as a less than massive increase. But of course, if you multiply the numbers by 1 million for 2024 and 1,000 for 2023, you can come up with the actual amount. We've done the math and found that swaps and swap dealers often manipulate markets through strategies like using securities sold, not yet purchased, made legal by the Bernie Madoff exception. This phrase refers to short positions where a firm sells a security it hasn't yet acquired, betting the price will drop so they can buy it back at a lower cost. This creates downward pressure on the asset's price, leading to market manipulation. A market maker like Citadel might short large volumes of stock across various securities, effectively pushing prices down. And by delaying the repurchase of these securities, they profit from the declining price. Additionally, swap dealers who trade these derivatives, where two parties exchange financial instruments, can exploit regulatory gaps or take advantage of large complex positions to manipulate market dynamics, often using the continuous net settlement system, the CNS. The use of these swaps creates leverage, allowing firms to amplify small price movements into large profits and obscure their true exposure to risk, further destabilizing the market. This leads to artificially suppressed stock prices. And of course, they use payment for order flow to allow market makers to execute retail trades in their own systems, diverting the trades away from public exchanges and into private venues such as dark pools. The majority of trades in the market now are traded on dark pools, not just for AMC and GameStop and other heavily shorted equities, but 51.7% of all trades across all stocks occur within dark pools. That means it doesn't matter what you own, whether it's Nvidia, Apple, Microsoft, Tesla, GameStop, you name it. They're being heavily traded in dark pools, more so than on lit exchanges. And payment for order flow allows these brokers to sell retail orders to market makers who profit from the spread between the buying and selling. When you combine that with trading in dark pools, it prevents the upward price pressure that would occur, it should occur, if the trades were executed on lit exchanges, on lit public markets. And because they're executed in dark pools, the public price doesn't rise nearly as much as if those trades were visible in the open market. By handling these trades internally in their dark pools, market makers control the flow of orders and mitigate large price spikes. They can prevent the price from going up, and they can make the price go down. And not to mention, they can front run your trades because they can see the order flow before executing the trades. If you want to help us change markets if you want to be a part of a company that is doing something that no other company has ever done before, you should consider being a founding member in Lit Exchange. Now, this is not a request for donations. We're not asking for a handout. We're asking you to invest in private equity under the Jobs Act of 2012 using Regulation CF exemption in order to own a part of the company, to have equity share ownership in the company in Lit Exchange, which aims to automatically route your trades directly to public markets. Now, I've been getting a few questions about Lit Exchange, and so we're going to go into the dashboard and actually see it, because a lot of people, let me log into it over here, have been asking me these things. How many shares will I get? Etc. And so I figured it's fitting to just actually answer it here for you guys. If you go to the FINRA regulated funding portal, Silicon Prairie, and you go to the Lit Exchange page for it, you will be able to see something called the Investor Forum. And in that forum, I went ahead and I posted some new updates just last night. Some people were wondering if they can invest through their business as a separate entity or only through themselves. Yes, businesses can invest. Can I invest if I live outside the United States? Yes. We have many investors already from Canada, from Europe, South Central America, Germany, Norway, Switzerland, Sweden, etc., and other parts of Europe and Asia. Outside the U.S., investors must use wire transfer or ACH options to fund your subscription. And it is a one-time only, not a recurring subscription. I get that question a lot. It's not a recurring subscription. That's just the terminology used by the funding portal. Step 1 is to subscribe. Step 2 is to pledge. And step 3 is to fund your pledge. Debit and credit cards are accepted in the United States and Canada, according to the funding portal's regulations. Those are not mine. Those are things that the funding portal deals with directly with FINRA in enacting the ways that they accept money. We haven't spent a penny on advertising, but we do expect to start doing that soon. And we do expect the campaign to reach the maximum goal, thus ending the Regulation CF campaign once we begin spending the earmarked advertising dollars that we have. All of the investments made by retail investors is 100% organic. We have not paid to advertise it on anywhere whatsoever. But once we do start getting millions of eyes to see it across various channels, we do expect it to reach the maximum amount. So if you can afford to become a founding member, it would be greatly appreciated. And I believe that the benefits, the perks, and the equity to be very substantial for retail investors. And if you're wondering, how many shares will I receive? Well, this is private equity, meaning that as we're not listed on a public exchange yet, so you can't go on the NYSE or the NASDAQ and buy us through your brokerage yet. We plan to take Lit Exchange public through an IPO, and that's not 23, that should be 2 to 3, but it looks like I forgot to include the dash there, within the next 2 to 3 years. And when that happens, retail will have the opportunity to sell your shares at the market price or hold them as long as you'd like. Right now, during this private equity investment phase, you're investing in the company and receiving 1 unit of Lit Exchange for every $500 invested. So for example, if you invest $2,500, you would receive 5 units of Lit Exchange. And upon IPO, your units will convert to shares based on your ownership percentage of Lit Exchange at that time. Now, here's an example. And these numbers are not verified and are not accurate. They're not indicative of any plan to IPO with this number of shares. They're simply an example of the mechanics of the unit to share conversion. So if, say, for example, we sell 10,000 total units that are issued during this investment round, and Lit Exchange goes public with 500 million total shares, each one unit that is currently available for $500 would be worth 50,000 shares. So if you hold 5 units, you would receive 250,000 shares at the IPO. If, of course, same goes to say, if we IPO with 1 billion total shares, each unit right now worth $500 would achieve 100,000 shares. So if you hold 5 units, you would receive 500,000 shares at IPO. And again, these numbers are not verified and not accurate in the sense that I didn't calculate how many shares you would receive, etc. This is simply an explanation of the mechanics of the unit to share conversion. You'll also be among the exclusive few with priority access to purchase additional Lit Exchange shares at the IPO price before we go public. So this means that if you choose to do so, you'll have the opportunity to increase your ownership stake just before our IPO. And that is what first buyer's rights means. You will have the opportunity to increase your ownership stake just before our IPO. There is no requirement to do so. That is just one of the many rights that you would receive as a founding member that nobody else in the world will have. So in this context, a pre-IPO allocation refers to the opportunity for founding members to purchase additional shares of Lit Exchange before it officially goes public. This means they can buy shares at the IPO price before trading begins on the stock exchange, potentially giving them an advantage over regular public investors. So again, this is called a rights offering or reserve share program, in case you were unaware, and it just gives you a little bit more context into the way that this may work for you. Let's see what some of the people are saying about Citadel swap dealer increases their short position by 204%. Neil says payment for order flow and dark pools are completely manipulative practices and should be entirely outlawed. This is why I wholeheartedly support Lit Exchange. I want to see fairness and equality for everyone in the markets, not massive advantages for broker-dealers and market makers. Go Lit Exchange. You will be the only exchange for executing my trades when you're up and running. Cheers, Neil. I really appreciate your support, my friend. Thank you for your partnership in Lit Exchange as well. Jay Lee says, when are you available so I can ditch these market makers? Please, soon. Ready to buy my AMC with you. That's awesome. I'm going to give that a like. Very cool. Octave Anderson, looking forward to the Lit Exchange going live. Thank you, Mr. Anderson. And Pamela C. Richard. Fantastic overview, boss. Well stated. I plan to invest in the near future with Lit Exchange as I see this as one of the best means of taking back our markets. Screw the hedgies. Thank you very much, Pamela. Now, I want to mention one more thing. Quant Trades asks, hey boss, do you guys think you'll have an open source API? I know you said we can build programs for retail with approval. Well, my friend, I've got some good news for you. And you're probably going to like it. If you take a look in the business plan of Lit Exchange, you will likely get a lot of information. But I will go ahead and pop that up for you so you can see it for yourself. I'm not going to review the entire business plan because it's long. That's the point, right? It's meant to be in depth. But I want to take you here briefly into the opportunities available that will be available to retail investors and engineers, coders, developers, etc. Excuse me, I meant to click the pitch deck, but that's okay. you haven't taken the time to read the pitch deck, I highly suggest you do. It is likely to give you a lot of insights that you may not otherwise have. And it does a good job of giving people an overview. Now, within the platform, we will have a marketplace. And this marketplace will catalyze innovation by retail investors and empower people and third-party developers and partners, such as yourself, Quantrades, to create and monetize custom applications that are usable within LitExchange. Artificial intelligences, content, bots, charts, algorithms, etc., that will ignite the creativity of the developer community. So this supports individual creativity of guys like yourself and really gives people an opportunity to even make money from it as well. Because our platform here is going to be created to allow everyone access to these third-party applications and tools. And then users such as yourself can create them and others can subscribe to them and tailor them to meet their needs, right? If they want specific outcomes. Say you want to be able to track Nancy Pelosi's trades. You create a bot that does that and reports it to people. Then other people can go ahead and sign up for a subscription to trade, or should I say to track Nancy Pelosi's trades, and you would constantly be updating them, or should I say your algorithm would constantly be updating them from within the marketplace. So this, of course, differentiates us from traditional brokerages and reinforces the commitment to people as a community working together to strategize in new ways. So this is going to be really a vibrant, dynamic marketplace that's going to be constantly shifting and changing with new applications, new integrations, new capabilities that LitExchange users will actually be able to create. So this, we think, is going to be a very collaborative effort, and it's going to enable developers to earn through paid applications and subscriptions. This is of course, going to cultivate a self-sustaining cycle of innovation, benefiting everyone that's creating the applications and those people that are also benefiting from using them to make them better traders and better strategizers. So I did want to bring that up and share that with you because I've been getting that question a lot. And I think that if people go ahead and do a little bit more reading, which I know it can be lengthy because this is very lengthy. It will provide a significant amount of context to users that is otherwise pretty hard to achieve. Doug says, make trading great again, my friend. That is the plan. I'll answer a few questions since we're on the subject, ladies and gentlemen. Larry Garcia, how long before you close the investor opportunity? Well, my friend, it can actually close at any time. That is not something that we can, well, we can control. We can close it with public notice early, but we don't plan to. It is scheduled to extend through July of this year. However, when it reaches the maximum goal, it will close automatically. So when we start advertising it and more people start to learn that it is possible to, for the first time ever in the history of the world, invest in an upcoming stock and crypto brokerage before it launches in IPOs, we expect that it will probably reach a level of FOMO, a fear of missing out, in which people will start to invest in the company very quickly, and likely it'll be closed. So I can't say for sure, right? I could say as of now, it's scheduled to run through July, but at any moment, one person could go out there and buy up all the remaining units, for example, reaching our maximum goal, and then it would no longer be open to anybody. Or a few people can, or many people can each buy $500 worth of units, and so on. Merle asks, so once LitExchange is fully up and running, basically all remaining holders should transfer their accounts and holdings over to you. Would this impact the price or highlight the fake shares? Well, Merle, I will say this, that at LitExchange, We plan to provide everybody with publicly announced numbers posted within our website where people can see how many shares of heavily shorted equities are held. However many millions of shares of GameStop or AMC or Tesla or Nvidia, whatever, are held within Lit Exchange at any given time. And we plan to update those numbers very regularly. And for the record, if your brokerage or you suspect your brokerage is lending out your shares without your permission or doesn't actually hold your shares, then they would have to recall those shares from whoever's borrowing them, potentially forcing whoever's borrowing them to have to go out and find new shares. And if the brokerage has to go out and buy your shares to send them to Lit Exchange, which they do have to do, then that could, of course, potentially lead to delta hedging, gamma squeezing, FOMO buying, gamma ramps, who knows? Len Gregg asks, why is any method used by Bernie Madoff considered an industry standard? That is a big problem and something that I think to myself every single day. It is absolutely infuriating. But again, the market makers and the hedge funds and the broker dealers are making a killing off of it. So it's not going to go anywhere anytime soon. So we have to do something on our own. Christian says, I really think that a big push in raising capital you will see, boss, after MOAS. Christian, I really appreciate that, my friend, and I've heard that from several people. The thing is that we're not waiting for MOAS to launch Lit Exchange. Lit Exchange will launch in the very near-term future, regardless of what happens with any stock on the market, AMC, GameStop, etc. So I appreciate that sentiment very much, but we're aiming to change financial markets for the better, for the betterment of everybody, including GameStop and AMC holders, even before any sort of short squeeze were to occur. Hey, what's up, Gino? It's great to see you, my friend. Matt says, can't wait for Lit Exchange. It's going to change everything in the stock market, and I can't wait to see what happens when most orders go to lit markets. And you know what? I have to completely agree with you, man, because right now, 51.7% of all trades in the market on all stocks combined are happening on dark pools, more than half. And lit markets make up a smaller and smaller percentage of that every single year. And that's, unless we make this change and do it ourselves, it's not going to stop. Yes, Maynard, we have Kash Patel's hearing tomorrow. Hopefully Devin Nunes, the CEO of Trump Media, has brought up naked shorts to him. Paul Andrews says, Kenny G will be calling boss for a bailout. What say you, boss? I say, you're shit out of luck, Griffin. Griffin is shit out of luck. So yeah, go ahead and take a good look at it. And keep in mind that as a trader, I personally would much rather pay a few pennies for a small trade rather than have no idea what I'm paying Robinhood or Charles Schwab in their commission-free brokerages, because you're still paying. It's just coming out. You're getting worse buy prices. You're getting worse sell prices. The thing is, you don't know if you're paying 1 penny, 5 pennies, 20 cents, 30 cents, $1. You have no idea. And that's the big issue. I'd rather know exactly what I'm paying before I make a trade. If I make a huge trade with tons of shares and I'm paying a couple dollars, big deal. At least I know it cost me $3 opposed to $38 in hidden fees. Nothing in life is free. Commission-free trades are not free. They should just be called invisible commission trades, because that's what they are. You're still paying the commission. You just don't know how much it is. Keep in mind, the SEC fined Robinhood $65 million for providing their customers with subpar prices due to high payment for order flow rates. And they found that retail investors lost over $34.1 million in customer losses, even after taking into account the savings from not paying a commission. Because you paid so much in commissions that you paid their commission plus $34.1 million to boot on top of that. The SEC said that Robinhood provided misleading information to customers about the true costs of choosing to trade with the firm. And they have, of course, Robinhood agreed to pay the fine and were censured for doing so. But of course, the practice continues. They just removed some keywords from their website so they can continue to do it. Again, the SEC has filed suit against the market maker Virtue Financial for alleged market manipulation. Using payment for order flow to obtain customer orders, they then allowed their hedge fund, Virtue Americas, the ability to front-run customers' trades and provided full access to all customers' personal, private, and confidential order information in complete detail. JP Morgan Chase was fined $348 million in March for allowing market manipulation across billions of trades in over 30 of their dark pools from 2014 to 2023 for a decade. Billions of retail orders are traded in dark pools and over the counter every single day, substantially suppressing and distorting stock prices. And it just goes on and on, folks. Not to mention fake news. We don't often talk about this, but it needs to be talked about. High-frequency trading algorithms scan the internet for news articles and then make decisions and trades based on those news articles, even if it's malicious in nature or fake news. Why do you think short and distort campaigns keep fucking happening? Not to dissuade you or to convince you, because they will convince some people out there that don't do their due diligence. But the short and distort and FUD campaigns are highly effective, as the artificial intelligence-based high-frequency trading algorithms read those fake articles and then sell stock short based on those articles. Investors lack a unified platform for gathering, analyzing, and sharing due diligence. People spend a ridiculous amount of time navigating thousands of posts and websites and social media sources, searching for information, trying to figure out what's fake and what's real news, and then attempting to formulate strategies and make trades while wasting valuable time. And so far, the most conservative reports and estimates are that retail loses $39 billion per year due to fake news. And in one moment, in a 30-minute span alone, $341 billion was lost in the S&P 500 in a 30-minute span from one fake news article by ABC, to the detriment, of course, of retail investors. That was a 2017 report that falsely claimed that former National Security Advisor Mike Flynn would testify that Donald Trump instructed him to contact Russian officials during the 2016 election. Now, we all know that this was fake. We all know that that never happened. But even still, that one news article, over 30 minutes of it being on the internet, caused $341 billion in losses on the S&P 500, negatively impacting retail investors. Christian, I appreciate you, my friend. Thank you for saying. They said, that would be even better, boss, if you could launch Lit ASAP. I would love to transfer my shares to Lit Exchange, buy on your platform as well, and see all the shares of AMC your broker holds and be amazed. Cheers, my friend. That would be fantastic. That is the goal. That is the whole plan, my friend. And we are well on our way to realizing that plan. That's why I want retail investors to invest in this company. Robinhood, in their pre-seed round, launched a campaign with Sequoia Capital, raising only $3 million. We have already raised over $500,000 and haven't spent a single penny on advertising. We will get there, my friend. And we don't need $3 million to do it either. So, I think this stream's gone on long enough. I need to reach out to our development team. So, I didn't realize it was after 5:30. I got to go, folks. I wish you peace and wealth. Cheers, my friends. Make sure you're properly hedged. A huge shout out to all channel members and all founding members of Lit Exchange as well.